Stop using the Relative Strength Index. Try this Supreme RSI Indicator instead. This tool might appear similar to RSI, but its signals are 10 times more accurate. Take a look at these profits this indicator generated on Bitcoin on the 5-minute chart. These trades have all been successful. This trading strategy is a combination of volume price analysis and Supreme RSI buy and sell signals. It aims to find overbought and oversold markets and profit from them. So if you're a day trader who likes to trade on short time frames like 5 and 15 minutes, this strategy is exactly what you need. Pay close attention to every detail I'm about to reveal in this tutorial so that you can catch trends like this in any market. Traders, if you like my educational content, please support the channel by liking this video and subscribing. TradeIQ is the best place to find original trading ideas and profitable strategies explained in the simplest way possible. Without further ado, let's get started. So, the RSI Supreme Multi-Method is an innovative tool that combines the Relative Strength Index with selectable manipulation methods to identify overbought and oversold conditions in the market, along with the ability to detect divergences for enhanced trading insights. In the indicator's settings, you can find various customization options. The first block includes RSI length, overbought and oversold values, and RSI type. Personally, I recommend changing these levels to 60 and 40. This way, the indicator will be more responsive to price fluctuations. As for the RSI type, there are 4 options available. When the standard RSI method is enabled, the indicator uses the traditional RSI calculation to identify overbought and oversold areas. The volatility-weighted RSI method applies a volatility formula to the RSI calculation, allowing for a more responsive indication of market conditions during periods of heightened volatility. The smoothed RSI method utilizes a smoothing algorithm to reduce noise in the RSI values, presenting a clearer representation of overbought and oversold conditions. The length of the smoothing can be adjusted to match your trading preferences. The last method is session-weighted RSI. With this innovative method, you can specify multipliers for different time sessions throughout the day to manipulate the base RSI. Each session can be customized with start and end times, enabling or disabling specific sessions, and specifying the multiplier for each session. This feature allows traders to adapt the RSI to different market sessions dynamically. You can choose whichever method you like. For this strategy, it is best to select the session-weighted method. Additionally, the RSI Supreme Multi-Method Indicator draws divergences on the oscillator, providing an extra layer of analysis. Divergences occur when the direction of the RSI differs from the direction of the price movement, potentially signaling trend reversals. For example, when the price makes lower lows, but the RSI higher lows, the indicator marks this as a bullish divergence. Traders can expect the price to reverse to the upside. A bearish divergence occurs when the price forms higher highs, but the RSI lower highs. You can anticipate a price reversal soon. This method might work sometimes, however. I wouldn't recommend solely relying on these divergences. Another way of using the Supreme RSI indicator is analyzing overbought and oversold signals. The indicator has fixed areas of supply and demand. If we look closer, we can notice green, red, and orange dots around these areas. A green dot signals that the RSI line has entered the oversold area, whereas a red dot indicates that the line has breached the overbought zone. Blue dots signal that the indicator stays inside the oversold or overbought zones. The longer it stays there, the higher the chances of a price reversal. An orange dot appears when the RSI leaves overbought or oversold zones. Based on these signals, we can confirm buy and sell trades. The second indicator of this strategy is probably the most significant one. Why is that? You might ask. Well, it's because this tool analyzes the market in a totally new way. Unlike standard order block indicators, the volume profile order block tool pulls data from lower time frame bars and assigns it to various segments of the order block. By providing this volume profile inside the order block, the indicator supplies a deeper, multi-dimensional view of market activity that can enhance your trading decisions. Crucially, users have the ability to fine-tune the detection of order blocks. This is made possible through a single input setting called tuning. This integer value allows you to control the significance and frequency of the order blocks. Higher numbers will produce more significant order blocks, though they will appear less frequently. Lower numbers, on the other hand, will yield less significant order blocks, but they will occur more often. This enables you to adjust the sensitivity of the indicator according to your specific trading strategy and style. You can also customize the level of detail in your volume profile by selecting the number of segments you want inside each order block. I like to set this number at 7. So what is the best way to use these indicators in practice? Before I show you the strategy, let me first explain what an order block is and why it is so important. In trading, an order block refers to a price zone where large institutional or significant orders were previously filled. These zones can act as potential turning points in the market because they represent areas where major players have shown interest. Here's a simple analogy. Imagine you're at an auction. There's a particular item, let's say a rare painting, that several people are interested in. A few big collectors place large bids on this painting. Even after the auction, people remember the price levels where these big collectors showed their interest. Now, the next time a similar painting comes up for auction, people will be watching those price levels closely, thinking, last time, big collectors were willing to buy at this price. Maybe it's a good value. This memory of past interest creates a psychological level in the market. In trading, an order block is like that remembered price level from the auction. Traders watch these levels because they believe that the big players might be interested in trading at those prices again, either buying or selling. In essence, an order block is a zone of interest based on past institutional activity, and traders use it as a reference point for potential future price reactions. Based on the knowledge we have learned, let's move on to one of the trading strategies you can try with these indicators. For a long setup, the following conditions should be in place. First, the price must revisit an order block. This means a candlestick's lower wick should touch the block. However, the candle bar must not exceed it. Second, a reversal candlestick pattern must be formed during the retest. It can be a pin or an engulfing bar. Third, the Supreme RSI must become oversold. A long position is opened when an orange circle appears on the RSI. Target twice the amount you risk. Apply a trailing stop loss as soon as the price has moved in your favor. Remember, do not risk more than 3% of your account per position. Do the opposite for a short setup. First, wait for the price to retest the order block. Second, a reversal candlestick pattern must be formed during a retest. Finally, the RSI should become overbought. A sell trade is initiated when the RSI leaves the overbought zone. This is confirmed by an orange circle. Apply the same money management principles as for long trades. Now let me demonstrate how to build the same indicator setup. First, open any chart on TradingView and click on Indicators. Search for RSI Supreme Multi-Method by Jacob Maglaby. Click on it to install it on the chart. Open its settings and make some adjustments just like I'm doing right now. For the second indicator, search for Volume Profile Bar Magnified Order Blocks. Open its inputs and change this value to 7. That's it. The setup is ready. Traders, if you enjoyed today's episode, leave a like on this video and subscribe to TradeIQ for more. Thanks for watching. Till next time.